CPI did it again and came in well below market expectations. This is causing an almost 4% rally in the Nasdaq here in pre-market. So let's get straight into all of the numbers, what this is going to do for the markets, literally everything you guys need to know about the data we just received. We'll talk about it here in this video, guys. We'll talk about AMC as well, because specifically for AMC, you are seeing the cost to borrow average going through the roof at 145%, the cost to borrow max at almost 315%, and this is not just a fluke number. These numbers are holding these levels. Yesterday's cost to borrow average was 75%. You are seeing that more than double here today. So let's get straight into it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns. If you guys like this fast, up-to-date news, we got to get it to you as soon as possible so you can make money off of it. And if you guys want to come trade with me live in real time, also link down below in the description of this video. So obviously, first things first, the most important thing of this video is CPI, and that just came out here about 20 minutes ago. The inflation rate year over year for October, the consensus was 8%. The forecast was for 8.1% year over year. The previous reading was 8.2%. The people were expecting CPI last reading to come down a lot, and it did not. That caused a major sell-off. Well, this time around, it came in at 7.7%. So that was 40 basis points better than what the market consensus estimate was. So that was very bullish. Core inflation rate year over year was expected to come in at 7.5% was the forecast. 6.5% was the consensus. 6.6% was last month's reading. And this month's reading for October came in at 6.3%. So much better than expected. Inflation rate month over month for October, the consensus estimate was 0.6% gain month over month. The forecast a 0.5% gain. The previous gain was 0.4%, and today's gain was 0.4%. So again, much better than expectations. But the thing that is really getting people very, very excited here this morning, more than the year over year change and all of that, is the core inflation rate month over month for October. The forecast was for 0.7% increase. It only came in at 0.3%. So you're getting very close to actually deflationary pressures. And essentially, economists were wrong on these inflation expectations, specifically month over month. For core, you came in at 0.3%. Markets were expecting 0.7%. That is much lower. That's like a 3 standard deviation miss from the economist. Now, something that is also making people very, very bullish also, you got the initial jobless claims for last week, and those initial jobless claims came in at 225,000. The forecast was for 220,000 jobless claims, so 5,000 jobless claims more just for the week alone than the consensus estimate was, and the continuing jobless claims pretty much stayed the same. So some big things, guys. And what this is really doing is causing a very bullish market reaction. And you can see the Nasdaq is up 4% for the futures, the S&P up 3.16%, and the Dow is up 2.5% at the time of recording this video. But the biggest story is going to be in the bond market. The bonds are shooting up today. The bonds yields are shooting down. The 10-year treasury down about 21 basis points so far. So that is a very bullish thing on the day, and that's really going to be the big story investors are talking about. And why the bond yields fall is because when inflation comes down, the Fed is not going to raise rates as aggressively, so bond yields don't have to go up as much. And the bond yields have been pricing in, all these crazy rate hikes possibly getting to a 5 or 6% terminal rate before the Fed stops, and you get this surprise CPI report, it's going to cause a lot of optimism. At the same time, another thing that has been crippling this market is the dollar rally. The strength of the dollar has been a very negative thing. As you guys do know, I'm sure if you watch this channel by now and even make it a couple minutes into these videos, when the dollar goes up, that is negative. Why is that? Well, take for an example a company like Tesla doing almost 60% of their total business in foreign currencies. Globally, right? China's taking in yuans from China, for a large portion of their business. Well, when the dollar is going up, it means global currencies are weakening. So when Tesla, for an example, is taking in a weakening Chinese yuan because they're easing, and who the hell wants to own a currency where inflation is running rampant in the world and that country is easing? They're not even restricting their own currency. People don't want to own global currencies. So what that does is when Tesla takes in foreign currencies, they go to convert that to dollars, they're going to get a lot less US dollars. That's why you've heard companies on earnings calls talk about constant currency. That means that if the currency was constant, not so volatile, they would have grew, 8%. That's what Apple's number was. Apple said constant currency wise, they would have grown 8%, but they only grew 4% because the currency has been going up so much and their conversion rates have really been killing them. So long story short, the dollar is down about 1.38% here right now. That is a very big move down for the dollar, and that is also going to cause a lot of optimism. So really the things that have been holding this market down every day, the dollar continuing to go up, bond yields continuing to go up, TLT continuing to go down, this correlation that we have seen with these really big red days or even really big green days, well, it's playing along today, and it's going to fuel a massive day for the stock market. Now, as far as AMC stock is concerned, as you guys know, AMC stock did just report earnings, and earnings were pretty good across the board. Relatively speaking, next quarter is looking pretty damn good because we're going to get a lot of blockbuster films, and that's a big reason why I do think AMC stock is going to rally here today and probably over the next couple of days. The last time CPI came in with a beat, and it wasn't even a bigger beat by any means to what we've seen today, was in August, and the stock market completely went parabolic. So I would expect something along the same lines, a somewhat similar move to happen this time around. And if we get that, AMC stock will benefit a lot like it did the last time around. And the last time CPI came in lower, AMC stock rallied in the course of a month about 100 and some odd percent. Let's go ahead and pull it up. It rallied about 124% in the span of about a month back in August. And considering that so many hedge funds, individual people, everyone is so short in this market, this is not what people expected. So what you're going to do is cause a lot of potentially margin calls, but really people are going to try to get on the right side of this trade, which is obviously going to be massively bullish today when they have been so short. So I do think you're going to see a lot of shorts covering across the board, potentially could lead into a MOAS-like event for AMC for some of the riskier assets in the stock market. Doesn't necessarily have to happen that way. It just depends how short people are in AMC, how bad this thing really goes, how much corruption there really is. That's going to be the real telltale. If AMC just continues to rally, goes up 100 200% from here, and you do see a mini short squeeze event, then it's pretty safe to say there was a lot of shorting that has not been fully recognized, that has not come up in the short interest, and probably a lot of manipulation at the same time. Now, nonetheless, let's go over AMC's numbers here today before we even start trading. The cost to borrow max is 145%, or cost to borrow average average is 145%, cost to borrow max is 315%, and the cost to borrow minimum is sitting at 15%. And you guys can see these shares that are available to trade are very far and few between, 200, 400, 700 here, and the cost to borrow rate is sitting at about 38.35%. So there really is a scarcity of shares to be sold short right now. I think that's probably because people are getting a lot more bullish on AMC, on riskier assets, now that CPI has come in much lower than expectations. Now, the total short interest of free float is sitting at 20.5%. The free float out on loan is sitting at 36%. The cost to borrow right here is sitting at 20% and 100% share utilization. Days to cover also at 5.64%. If we take a look at the option activity for the day, 9 orders totaling $4.38 million, positive order value of 84%. I think it's going to be a very big day for options overall. In AMC, I think there's going to be a lot of institutional investors today really trying to get on the bullish side of a lot of their bearish bets that they have placed over the last couple of weeks. Now, as far as the total option activity on the S&P 500 yesterday, you've seen about 6,500 orders totaling $1.01 billion, positive order value of 74%. Now, if we take a look at the options on the option expiration for this Friday, you could see only 29.5% of the total open interest is calls. 70.44% is put. So a lot of downside exposure here, and when there's that much downside exposure, it's going to cause a very, very big move. And that's really what I'm trying to express to you guys here in this video. This is not something that I would try to play a drop coming tomorrow. It's probably not going to happen. We're sitting at levels that we could rally substantially from here. And just for context, last time we had this kind of CPI beat, which we didn't beat CPI as much as we just did, but you essentially rallied from the lows of 2022 at that point 18.5% from right now the lows of 2022 to where we currently sit. As far as yesterday, we have only rallied 8%, so that means at least another 10% rally is probably in the cards from here, probably another 15% if I were to say so myself. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.